Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. In today's episode of Back to School, I'm going to cover the topic of $1, the power of $1. If you have watched some of my previous videos, you would notice that I use a tagline that says $1 at a time. If you look at marketing gurus and people who sell classes, most of them start you off on a $250 class or some type of free trial. Then they move you up to one class that costs more. Then they upsell you to $1,000 class, a $5,000 class, and eventually, once they got you hooked, they know they can sell you a $25,000 master class. What you don't see in today's marketplace is how many people teach you that you can start investing with a single dollar or the power of a dollar. And the answer is there's not many. Most people are not going to go out there and say, oh, you can start with $1. You don't need a lot of money and you can make that $1 grow. It all started out many years ago. I was working down in Wall Street. First job out of college. I didn't know anything about Wall Street. And my job required me to understand some of the basics of how stock market worked and how stock certificates were being handled by back office. These are the big banks that hold the physical securities, and I had to write some software that handles some of that. But every morning I would take the train, and by the time I get to the Wall Street area, I was a little bit hungry. So what did I do? Like most New Yorkers, you stop by one of these bagel stores. I don't remember if it's 50 cents or if it was $1, or if you had to buy a cup of coffee and it was like $1.25 or $1.50. I don't remember anymore, but I do remember this. Nearly every morning, I would go and get my butter bagel from one of these carts. So it got me thinking. During that time, I was investing using a full service broker, and my commissions were fairly expensive. Some trades could have been $50, $100. One trade I had was maybe upwards of $200 or $300. And this is just a little bit before discount brokers were coming out. I do remember E-Trade at that time was a really small company. They were probably only doing about 10 or 11 million dollars in revenue a year, and they were just starting to get into the discount brokerage business. I happened to use a different competitor back in 1995. Commissions were somewhere around $15, but there was a lot of fees, and sometimes you end up paying 20 or 30 or $40 per trade, and that's using the discount broker. So what I did was I looked at other options. And years ago, what you can do is join a DRIP, which is a direct reinvestment program where you can bypass commissions. And if commissions were 30, 40, or $50 per trade, the best way to do that is joining a DRIP. Back then, what you always do is you bought utilities, you bought energy companies, you bought consumer goods, cereal makers, and the typical stuff. And that's exactly what I did. I got my first DRIP somewhere around 1997, and I bought an energy company. And for reference, I put this chart out there so you can see what happened. Then I bought another one, which is very common. I got into Exxon, and Exxon, this was before they merged with ExxonMobil. And you can see the chart here for the last 20 years. Then I bought Pfizer. Pfizer was just, they had Lipitor, and they were going to make a lot of money on lifestyle drugs. As you can see, it went up, and then it just had 15 years of really subpar performance. And Warren Buffett's one of his favorites. I got into Coca-Cola, and you can see the chart is really not that bad. So why is this important? How did I do this using $1? Some of the minimums were maybe 20 bucks a month. Some of them had a minimum of $50 a month. So what I ended up doing was I definitely found a few of these companies that have really low minimums. We're talking about $10 or $15 a month. And I said to myself, can I afford $1 a day? If you do the math, that's 30 bucks a month, and that's $360 a year. I believe anybody can afford it. And because of that, I got into my first strip. And because I had an extra cash flow, I actually ended up buying way more drips. And I already tell you, I got Exxon, I got Pfizer, I got Coke. And by the end of, by around .com days, I was up to maybe 8 or 9 or 10 drips already. So by the year 2000, I definitely had a whole bunch of drips. And then the .com crash happened. A lot of people lost money, a lot of people who got out of the market. It just discouraged a lot of people. I even stopped trading for many years after that. And this is where I never coined the dollar method 20 years ago. I actually coined that recently. Because what happened was when I finally looked back at what worked and what didn't, I recognized that the most simplest strategies, this $1 a day, $30 a month, $360 a year strategy where I set up an automatic debiting back in the 90s, and this thing is still debiting out of my bank account today, was probably one of my best investments ever. So why did it work so well for me? Even at $1 a day, it never felt like it was a lot. In fact, there were times when I was unemployed and I just kept on letting this drip subtract $30 a month and buy more shares. And then, years later, when I look back at this, I recognized that this $1 a day was, was so simple and so easy to do. What made this thing grow was the value over time, reinvested dividends, and that's how I made money. You can turn $1 a day into over $20,000. I have Pfizer that's worth over $20,000 today. I have I have Coca-Cola. I think it's worth over $10,000 today. And I haven't put in any money since 2003. So I stopped that actually pretty early on. I only invested maybe 3 or 4 years of putting in $1 a day, and I stopped. And after that, I just let it grow on its own. And for Coca-Cola, I remember only investing about 3 or 4 years. And after that, I stopped putting in new capital. And I believe I have well over $5,000, mostly from dividends that I collected over 20 years. And this is the power of something as simple as $1 a day. So now let's look at what happened when I joined. Energy companies or utilities are probably one of the safest things you buy when you first start out. And the reason is mostly because you want a company that has a steady dividend, something that people will pay for even during a recession. And so an energy company or utility company falls under that category. And you can see here, when I first joined, the share price was still going up. And then at some point, this company went as low as $4 a share, which is down here in 2001, 2002. But the beauty of this is, because I started right around here, I only had a very few shares in the beginning. If you're buying $30 a month, even if this thing was 40, you see that it was $40, I'm not buying a lot of shares. So by it falling to $4 or $5 a share, I was now buying 2 shares or 3 shares a month. And then I did that and I never stopped. So I've been buying CMS Energy all the way when it was $4 a share on its way up. As you can see, today's price is 68, 69 bucks. It crossed into $70. If you look at Exxon, very similar. You see this Exxon just grew and then it went down and grew. And now the good thing about Exxon is you can see you still made money. And what I ended up doing was somewhere around here, I don't remember exactly where, one of these peaks, I actually did sell a lot of my Exxon Mobil, and I actually took that money, and because I don't believe in oil companies anymore, I actually started buying another energy company. And for those who follow some of my older videos, you notice that I've been recommending NEE. That was the company that I bought using some of the proceeds from my Exxon Mobil investment, and that has definitely outperformed ExxonMobil, and it definitely outperformed the S&P 500. I just not a big fan of Exxon anymore. It's not about the dividend. I just think there's a lot more risk, and I'm not a big fan of it. I think you can make money elsewhere. So the next investment was Pfizer. I got into it right around here, and I don't remember exactly 98 or 99. You can see it was close to the peak. The good thing is I've been buying all the way down, and it peaked right around here. I don't know that 2005 or 6 when it hit the bottom, I mean. And then the beauty about these long ride up, even if it took 10 years to rebound, I love it. As an investor, when it goes down and up, I love it because by the time it got back here, and you see, right now we're at $47, which is actually higher than it was in the past. And the beauty of it is this long, prolonged dip created an opportunity for me to make money. Most of the shares that I was buying in were less than, let's say, 20 bucks. And a lot of the shares that were reinvested from dividends were accumulated under 20 bucks. So I made money that way. The next investment is Coke. I did buy, again, I got into Coke. I don't remember, is it 98 or 99? And I only invested about four years or so, or 5 years. And then I stopped investing. And look at Coke, right around here. I don't remember where, but I stopped putting money in. And look at this. While it hasn't been a stellar performer, it definitely has been going up. And because most of my money was purchased around the $25 area and dividends, I made money on this. And because I have been so successful investing small dollar amounts, my philosophy is a really simple philosophy. I built my strategy around it has to be simple that anybody can do it. It has to be small enough amounts that anybody can afford to start. And if you just compound this over and over and over, it actually becomes much easier for me to keep on compounding. Now today I'm not just doing $1 anymore because I'm investing a little bit more. And a lot of my assets are actually creating a lot more money than I put in myself. And that's the beauty of compounding growth. By starting at $1 a day, some of these investments are making me 30 or 40 or 50 bucks in dividends. Some of my investments are making much, much more. And because I have other investments that are making money, it just compounds. And everything I'm doing is buying more investments that will create more passive income for me. Hey, so that with that being said, I hope you enjoyed this particular video. I hope that you will see that doing $1 a day is doable and it can build wealth. It is a mindset. It is simple. Anyone can do it. As always, let's do this together. Let's do this $1 at a time. Have a profitable day. Bye-bye.